Hey, what's up? Tim Reset from E-Mini Mind. In this video, I want to give an example of a breakout short setup. And in this case, on the ES, we had a high bar form in this small rally. That bar ended up being the high of the pullback, high of the bounce, if you will. Once we broke the low of that bar, that kind of sent the market that momentum that carried through the break and began to push us lower. So we had to push lower, again trailing our stop once we continue to break lows. So you'll sometimes see these situations where you have a large candle or a large move and then an inside candle following it. I'll just go ahead and leave my stop above the initial high or below that initial candle's low until we break lows once again. And as we continue to break lows, you notice down here we had a little double bottom formation, and that's the signal to again tighten the stop once again. And so the position went from 37s down to 33.75s. A nice little move, capturing a good chunk of the move on this short. And so identifying the high bars and the low bars on the chart, going through marking the highs and lows, identifying the low of that high bar or the high of that low bar, those end up being the entry signals into the trend. So the step one is identifying the high bars and the low bars. Step two is marking the low of the high bar or the high of the low bar for entry. And step three would be the stop placement above the high for shorts, above the low for longs. And then step four, managing the position. It's just a matter of trailing the stop. I like to use the prior candle as my stop trail placement, and I'll just trail that stop until the trade is taken out. That way it's the market telling me when to get out rather than myself using an arbitrary profit target or changing my strategy within the trade. So this way things stay consistent. It's trading the same way each and every time, and I found that makes for the most effective use of the intraday breakout trading strategy.